Hello, I'm Ricky Lee, and today on the watch list, I'm joined by Andre Liebenberg, CEO of Cake PLC. The company has just raised around 175 million US dollars, well above its initial target of 125 million, strengthening its position in the uranium market amid strong investor demand. Andre, welcome to the watch list.
Thanks very much, Ricky. Nice to be here.
We're so thrilled to have you. So tell us, Andre, you've raised about $175 million, exceeding your original target. Will it all go toward the 2025 Kazatomprom option, or are there other acquisition or hedging opportunities that you're considering?
Yeah, the deal we have with Kazatomprom allows us to buy up to $100 billion of uranium per year. And so, the initial target of $125 million was to raise the $100 million for the 2025 option and add some working capital and to cover some of the expenses of the raise. Because we had very strong demand, we upsized the issue to $175 million. So we can't apply any of the additional to the option, but what we can do is go strategically or opportunistically into the spot market to buy additional pounds. We've seen of late that the spot market is very volatile. Prices go up and down quite a lot. So this may provide us with opportunities. But, having said that, we're already in October, a few months away from the end of the year, and our next option, the 2026 option, opens in 1st of January. So, who knows? Depends where we are. We may use some of the funds for that.
Okay, and so the business model is closely tied to the uranium spot price. So how do you manage the downside risk if prices were to fall before your next round of purchases?
Yeah, we don't really trade the market. We're providing investors with pure exposure to the uranium commodity. So if the commodity goes up, we go up. If it goes down, we go down. It's just like gold or copper. So you take your view on the commodity. We're not trying to protect on the downside. I guess the difference between us and, say, an operating company or a project company is we're physically backed. So we can't go to zero because the uranium price can't go to zero. But if a project company doesn't get its permits, it can be disproportionately impacted on the downside. So we already offer one-to-one leverage to the uranium commodity for investors without any additional leverage, both to the upside or the downside.
And for investors taking part in this placement, what kind of liquidity or exit options do you see ahead, whether through secondary trading or buybacks or other mechanisms?
Yeah, we're a pretty liquid stock. Post the raise, we're probably north of 1.6 billion US. We trade over 1 million shares a day, so easily above $7 million of liquidity. So for those investors that want to exit, there's a liquid means of doing it in terms of just daily volumes. But again, we don't provide hedges. In the past, we've done share buybacks, but that it doesn't really make sense for us to look at that as a mechanism, because the impact you have is very temporary. You announce a buyback, half your discount goes, you conclude the buyback, and the shares go back to where they are or where they want to be. But at the moment, we're trading at pretty tight discount, so it wouldn't make sense in any event.
Okay, well, thank you so much for your time today, Andre.
Thanks, Ricky.
Thank you for joining us. That's Andre Liebenberg, CEO of Cake PLC. For more on the company's capital deployment and uranium investment strategy, visit yellowcakeplc.com. That's all for this episode of The Watch List. I'm Ricky Lee. Make good choices today.